Hi, this is Randy Finney with Right Side of the Chart, and today is Friday, February 11th, 2022. In this video, I'm going to cover trade ideas. These trade ideas are all going to be in the education and training services sector. A lot of these, not all, but a lot of these stocks are Chinese stocks, Chinese education online stocks. They got the snot knocked out of them. China made some changes, some regulatory changes to the industry. And so the fundamentals in many cases are dismal. But I'll be honest with you, I haven't done any due diligence or research fundamentally into these. I just know of that. And again, so a lot of these stocks, there could be, the bottom could be zero. And so I'm just going to start out the video saying these are aggressive trade ideas. I'll share my strategy. I'm just warming back up to these after covering almost all the stocks I'm about to go through. Other than this one, I've covered a couple months back, and what they did is some of those played out, only a couple, and a lot stopped out of. I take a basket of these, and I'm doing that again. I'm going to layer in lightly, and again, I'll talk on my strategy in a second, but let me just first try to make sure if this isn't your cup of tea. I'm going to try to scare you away from these if you're risk adverse. I know that's an oxymoron, a risk adverse trader, but maybe you're using the site for more and longer term investing purposes, so this is not your cup of tea. So I'm just going to start out with some examples of what can happen in this sector. Again, I don't know anything about this company. I don't even know if this one's Chinese or not. TWOU 2U Inc. So 2U Inc. is the name of the company. And so here's an example now. This wasn't one that I highlighted before, nor would it have been one of my favorites because you didn't have, I like to see, ideally, not always, but I really like to see most of the setups in this that I'm going to go over have positive divergence or recently put in divergent lows. This one didn't. You can see lower lows in the indicator. What it did, it made a breakout of a trend line, and that breakout failed. So there's the breakout right there. Look at that nice, pretty well-defined trend line. And so here's the example I'm going to give you. And I actually, from time to time, I'll talk about the different type of orders and loss mitigation and how stop loss orders really are they're you got to use them, but they're not a perfect tool. In other words, you cannot always quantify or minimize your downside, and the reason is the way those orders work. So let's just say you took this breakout, and let's say you had a stop loss just below, a little bit below the breakout in case it failed, right? You were going to go, that would have been, let's say, a first target there, 1971. The stock that day after there's the breakout candle. The following day it followed through, which is what you would have wanted to see, although volume was suspect. That's another takeaway from this. I'm kind of throwing out tidbits here. I like to see breakouts occur on above average volume, at least one and a half times or better the average volume. That didn't happen there. And so we closed that day at, let's see, right here it says close the day at $17.98. It's right about $18, right? Let's say your stop was down here and you were willing to take, because it's a volatile, low price, not low price, but more of an aggressive trade. So let's say you're willing to take a 10, 12% loss. Well, here's what happened to you. You gapped down, the stock gapped down, and it opened the next day at 12.11 right here. And that was a 30, from where it closed before, almost a 33% gap down. And so, as I talk about often, there's two types of orders: stop loss, stop limit. Stop loss orders will execute at the open as a market order the following day. So you would have been filled at 12.11 or worse. You would have been in line, your order, with a bunch of others. Stock fell fast, and then you might say, okay, well, yeah, for that reason, Randy, I won't use stop. I use stop loss. I use stop limit orders, which say sell me at, if the stock crosses down below 16, sell me out at 16, but only 16 or better. That's what a stop limit order entails. Well, guess what? You would have been better off with a stop loss order because you would have got filled around the open, but this thing kept tanking throughout the day and continues to tank. So right now you'd be underwater by the tune of 50%. You would have lost half your money, and you'd still be in the stock. Your stop limit order would still be hanging there if it's good to cancel. And with the condition, it's been triggered, the stop part of it, but the limit part can only if the stock gets back to 16 will it sell you out. So you could lose all your money in that one. So, all right, I didn't want to gonna. I think that's important. I mean, risk management is a huge part of trading and investing. Let me just show you a couple others. Again, all I'm trying to do is scare you away. Stocks that are in the sector, again, whether they're Chinese or not. You had a nice support right here. This one again would have never been a setup or a trade idea I would have thrown out there, but there's an example of the gap down, a big 15% gap down, and then I saw another one in the group right here that had a false breakout. There's another false breakout right there. Nice, pretty nice downtrend line. Breakout failed the next day, and the thing's back, it's still heading lower. So the takeaway here is, look, these are high risk, but risk and reward go hand in hand. So I think the potential is good, and I like some of these. So now I'm going to go through my top picks, and again, share my strategy, which is to take a very small position. Small is relative to your portfolio size and your risk tolerance, assuming you like these. And whether your number is $1,000 you want to put in the sector, or 100,000. What I like to do is take the top. If you can manage all the ones that I'm talking about here. I've got about 17 names I'm going to give you. I think it is great. If not, take at least a half dozen or maybe a dozen, and just sprinkle out small amounts of cash. A lot of brokers today have zero commissions, so you can effectively do that. Buy them, set them, and forget them. In other words, put a stop loss order or a stop limit, whatever your preference is. And I like OCO orders. You can also put your price targets, or you can just trail them up. But I'm liking what I'm seeing here, and that's why I'm covering this. And these also march to their own drumbeat. A lot of these stocks are not tied to the major indexes. They're not components of the S&P 500. Some may be. I don't think so. And probably not the NASDAQ 100. So starting out here, COE, okay? These are, again, ones that I highlighted back here. We had, that back then when I covered it first would have been right here. I said potential divergence, potential divergent low. And now it is confirmed. We have positive divergence. Indicators have now turned back up, and this stock broke out. And you can see it's been taking volume. Breakout was on above average volume. Look at the volume bars. I don't know if you can see them in the video, but it's big. There was above average volume on the breakout candle right here on Wednesday, follow through yesterday, and today. My first and minimum target's 160, but I think this one has the potential to go up to either that second target at 223 and or that third target at 365. If we get some traction, I might extend it, but let's just say that's the final target now at 365. That's COE. All right, next up, CHGG, Chegg Inc. There's the same story, divergent low, positive divergence. I won't draw it each time. I want to go through this video faster and cover all of these so the video doesn't go too long, since I spent a fair amount of time trying to impress upon you the risk in trading these type of stocks, even if they break out. And I just showed you a few false breakouts. But again, I'm picking ones that have more constructive chart patterns. All those three I showed you in the beginning video, I didn't highlight before, and nor would I have had positions in those or pointed those out. Just wanted to kind of give you the nature of the sector, especially with poor, stocks with poor fundamentals. You might want to also scrub any positions that you're considering taking or that you do take for earnings, and be aware that those gaps usually happen during earnings, on earnings, following the call or the release of the earnings. So this one just broke out above that 3120 resistance. Potential, not an active trend line because there's only a couple reactions. So more important, it broke above there, and it appears to be flagging, a little bull flag action possibly. So if this one can break out, you can take it here since you broke out at 3120. And again, my strategy, I just told you, start small, little what I call a shotgun, spread it out, small amounts in each one. And then if the technicals improve, meaning more and more of these breakouts, some of them I'm giving to you, like this one, have broken above resistance. Others are very close. So what I do, I have price alerts set on a lot of these. And so as the alerts start to trigger and I see more and more of these stocks breaking out, and look, let me just loop back. I know I'm all over the place here to fundamentals. I don't give a rat's ass about the fundamental outlook of these. If the technicals are good, Uh, all you need is to pop, break resistance, and start getting the momentum traders in, and they'll run these stocks up. They are probably rife with short interest. And so, if GameStop and AMC taught us anything, it is that fact that stocks with abysmal fundamentals, companies that probably should have been out of company, can go up tremendous amounts in short order, and that's because those were engineered short squeezes on those. That's what you could get in this sector as well. So, if you are, only take stocks based on bullish fundamentals, then this isn't your setup. Or it may be. You guys do your own due diligence. Add to the comment section, and if you see something positive that's happening in the sector. But again, I'm looking at technicals, and there it is. So, target. Let me give you just a sold target right now, 44.50, just shy of that level. There is the bottom of the gap right there, and that's probably where you get a little reaction, maybe some selling. So, I'll say first target 39.35, second target 44.50. Unadjusted targets sell a little bit below the actual resistance level that you are targeting. All right, I got to go through these a little faster because I got a lot to cover. EDU, really liking this setup here. Look at that nice downtrend line there. Potential, we need to get a reaction here. But more importantly, and that's where I believe I have an alert set over 177. So a couple ways. You can either start scaling in now. There's big divergences. The reason that I'm scaling in, and again, I'm just talking, I have just a token, what I call Vegas money. Money that I'm, if I'm going to put in my pocket, go to Vegas, and I'm willing to lose it, that's what I'm starting with. And I'll only add to and plan to add to if I get breakouts. If I see these stocks start to take out these resistance levels, in this case 177. And what's the reason I like to get ahead of them sometimes, and again, I was in some of them before, got stopped out all of them, and completely forgot about the sector until I was going through stocks this morning, and started a couple of them popped up on my radar, and then I revisited the sector and looked at my flagged stocks in there. So that's what I'm going over. So that's it. 177 should, if it pops that, and again, if the sector starts to get momentum, meaning, what I mean by that is EDU may pop 177. It could even do it on volume. But that breakout is going to be much more likely to stick and get built upon because that's a pretty aggressive target. If we hit it 254, that's going to be about a 57% rally. It could possibly do it without the rest of the sector, but it's going to certainly help if the rest break out. So that's what I look for, and if I start getting those alerts, then I will increase or add to that position. Maybe 3 times what I currently took. A little starter position. All right, so that's that, and there's a monster gap to fill. Things would probably have to start getting positive in the sector, unless there's enough short interest. You could get a quick up there. So if you take something like this and you do an OCO order, you might want to have a sell limit just below $5 in case you're not around. One day it pops, short squeeze, because those if it hits those targets, those higher upper resistance levels, it's likely to reverse very fast. And of course, this thing could just crap out tomorrow. Like I said, this is just flirting with it. Came close to crossing down below the critical $1 level. I say critical because if you trade, a company's stock trades below $1 for too long, they face being delisted. So they try to really get that up. And anyway, that's EDU. Next up, TAL, another one I like. Look at that downtrend line right there, and 379 is a magic number. That's where you want to set a price alert, or if you want to be safe, you wait for a break above 379. And again, that should take us up here to that first target, 577. Really a target zone, 577 to 556, and then a monster gap up here. If somehow these things can really get some traction, that gap gets backfilled, that'd be huge. But as of now, like I said, I'm just looking for near-term pops. These guys tend to march to their own drumbeat. They're not highly correlated with the market, and if nothing else, it's a way to hedge. Take a little speculative long position in some of these. That'd be about a 70% pop to hit that 577 target. HLG. Nice, pretty decent resistance at 1338. Again, divergent low, which is common on most of these. 1762, and then the downtrend line would be your second target. If things got really good, maybe up to 30. But right now, I'm looking at these initial targets, and we'll see. These might not even break out. This one, not one of my favorites, but I do want to mention it. STRA. You've got a pretty a decent downtrend line. Nothing great. A few reactions on it, and been building divergences for a while. Remember, divergences are not buy signals. What's a buy signal is a break above resistance. Oh, let me give you one more level, and that's where I'm going to set an alert because it'll. If we take out this level about 60.76, that will also have taken out the downtrend line. So that's what I want to see on that one. First target there is 68.51. I'm going to give you one more target I see up here. Resistance about 79.33 would be your second target there. AFYA, same story. Positive divergence right there. Divergent low, downtrend line in which to pop. And let me just give you a sold target now of right there. There's also reaction high. They'll probably come in and sell on the initial tag. So 16.16 and 18.57 roughly. PRDO per Perdocio Education Corp. I guess that's how you pronounce it. Pop took out the trend line right there and rallied, and it hit. I believe. Let me see. I think this was already there. Yeah, created on 12.9. So see, that was my first target. I would have covered this one before, and that first target was hit. So as I said earlier in the video, some, but not all. Some of these already did play out. That was about a quick 9%. When we hit it, we put in negative divergence there. It's drawn here. You can see the little divergent high. And so now what we've done is we pulled back, but we also failed the breakout. So I have mixed thoughts on this. It's not one of my favorites, but you could buy it here at 10.21 because there was some reactions there. Or wait for break of this trend line and or another break above that trend line there again. In fact, you already hit 12.51. If it does that, then we'd probably run up to that next target of 14, roughly right there. But again, not one of my favorites. But if you want to take a shotgun approach, you never know which one's gonna pop. Next up is GOTU. And that one sounds like a Chinese company, GOTU or whatever it is. Let's see here. We've got a downtrend line right there. Nice positive, aka bullish divergence there on the indicators. It broke out recently. Came in, retested the lows, starting to move higher. Targets 276, 346, 431. Monster gap like so many of these. That's when the sector, I guess that's when that news came out when China did what they did that really knocked the snot out of these companies. So 431 is a very significant resistance level. If you happen to get it, you may want to take profits there or at least trail your stops up. Sometimes, if I like what I'm seeing, I'll just, instead of booking profits just shy of 431, I'll just tighten stops up to protect profits and hold out for a breakout and maybe potential backfill of the gap. Because gaps, once entered, are usually backfilled. Not always, but quite often. All right, GOTU. And just to quantify it, to get an idea of the gain potential, if these do play out, that's about a 94% return if that target's hit. iHuman. This one, nice positive divergence there, divergent low. If I could, maybe a little wedge right there, yeah, that little downtrend. So if we could pop that, but more importantly, you need to take out 318 in the primary downtrend line. So I believe I have an alert there. Let me just set it if I don't. 318 roughly, maybe, yeah, about 320 in the downtrend line. Then your targets will be 429, 528, and 652. Let's just leave it at that for now, and we'll see if this thing even starts, if this sector starts to even get some traction. They're still in downtrends, so that's the other thing. Make no mistake about it. These are highly aggressive counter-trend trades. These stocks are in a downtrend. The stock market's rolling over. But again, sometimes that's when things look just about like they can't get any worse. And again, it's the technicals here. So and yes, the sector had abysmal fundamentals, but how much of that's already been priced into the fact many of these stocks are already down 80, 90%, 70, 80, 90%. AMBO. Trend line number one, primary trend line right there, and then you have a smaller secondary trend line here that it's just starting to crack, but no volume yet, so I'll really take that breakout with a grain of salt. But big divergence, And again, it's a sector that's set up. If the momentum traders start to come into it, this one I don't even see this thing stopping till it hits 132. And what would happen too is it's below that big $1 level. And stocks, when they can regain it, it's usually pretty bullish. You'll have a lot of buyers come in because then the delisting concerns going to go away. And so 132 and 170, and things get crazy up there about 211. STG, Sunlands Technology Group, downtrend line there was broken out, big green candle on volume, and then moving up. You have a secondary trend line right there, and we already hit. In fact, this one, this probably was one of the ones, yeah, because I had this flagged. That's another one that would have played out. I think I covered these last time in December. And so that one went up, and that was my max target there, 679. You can see in the downtrend line. So that one hit it for about, from wherever it was in December, about 100% return. So again, some but not all of these has played out, and that's why I highlighted. The moves are explosive. So if you're going to take on the risk of these, companies with crap fundamentals, you need to be rewarded for it. And because you have the risk of a 20-30% downside gap. So the only way I'm going to take that risk is if I have upside potential of 100% on a lot of these stocks or more, give or take, and you do. And so, in the whole shotgun approach thing, I could pick my one or two favorites, but guess what? My dumb luck, those will be the ones that crap out and have the big gap down. So that's why, again, I like that shotgun approach. It's the same concept of a mutual fund or an ETF. Safety in numbers. Don't put all your eggs in one basket. Now, yes, if you're putting, you have 30 stocks, doesn't matter what it is, in a horrible sector that's going down, you're going to lose money anyways. But you're mitigating your risk of any one single stock gapping down. So that's why I like, started out with about a dozen or so of these today, and I'll add to those and maybe again increase the positions if I see these breakouts. So there it is. Look at YQ. Gosh, I think I set alerts on most of these already. I'm going to do it again. I'll delete if I have duplicates. Downtrend line needs to pop that, and if it does, I don't see this thing even stopping until it hits 315. If the breakout sticks, that'd be about 117% return. Hey, you know what? In case, I didn't mention it, this one doesn't have a lot of trading history, so it's probably not the best example. But I did want to mention one thing I'm seeing on the weekly time frames on a lot of these, not just this one. Again, this one doesn't have a lot of price history, so the weekly is really not the best chart to look at. But I see the PPO curling up and poised to make a bullish crossover, and that's usually a good sign right there. It's a buy signal, if you will, at least on that one indicator. And sometimes, in a downtrend, it looks like the PPO is going to cross, but it doesn't. And that's what happened back then. And so that's why I'm revisiting this one now, because a lot of these, if we do get those breakouts on the daily, and these things can start to pop, you're going to get those bullish PPO crossovers. Some algos as well as humans pick that up. They see that, and that brings more buyers into the sector. So there it is. YQ, RYB Education. This one, well, there's another one. Again, I believe I had it flagged, so when I would have covered it back, again, I can't remember the last time I covered this one. Could have been before that. But since December, it popped and it ran up, and these were levels I had on the stock before, about a 52% return right into that 240 target resistance level, and pulled back from there. But basically what it did, it took out the trend line right here, back tested it, and it's moving up now after backtesting the trend line. So maybe it'll head on up to that next target or targets there. Max target right now I'd say is $3 if we can get some upside in the sector, and that would be, again, if we get there, about 60% from where we're at right now, and it's already backtested and moving up. So take a shot with a stop somewhat below. AACG, ATA Creativity Global. Not crazy about that trend line, but let's just use that. Yep, comes right off that. This second candle right there comes in, catches the top of these candles here, catches all these, and so there it is. And again, this one also, I believe I highlighted back somewhere in here. I'm not sure exactly, but it was flagged, so I believe I covered it earlier. And you can see there was a little minor downtrend line, and I had this one here. There's that trend line. There's the breakout. See, traders see these, and not all the time, but you get that. That was a big breakout, and it happened quick. So there's an example too of why sometimes I want to get in front of these, because by the time you get your price alert triggers, the damn thing's up here, and it broke out that day, and it just kept going. So from the breakout point, trying to measure, to where it was, where it closed the day, it went up 110%, and that's a green candle throughout that. It wasn't a gap up. It broke out, and once it took out the trend line, it didn't look back. So if you were, you had to be Johnny on the spot to get in there. If you waited, let's even say you waited an extra 20, 30 minutes. I don't remember where exactly it went throughout the day, but it would probably been up 30, 40% by the time you saw it, and you wouldn't have wanted to chase it. And look at that. This is again a trend line I had on this one right here. Created that trend line back in December, end of December, and look, that's exactly where it hit. It back tested that. So this is, on these kind of stocks, especially when volatility is high, and just like the stock market, technical analysis works great. A lot of traders, they're wondering, because fundamentally they don't know where this thing should be priced. So technicals kind of rule, and they're much more accurate means of figuring out where a stock's going to go. So it hit the back tested the trend line from below, pulled back, and now it's back tested the downtrend line, and so maybe it can move up from here. FFHS, First High School Education Group, you got a trend line which you can set a price alert, and that would trigger a long entry. So this is a setup. Big divergence forming there. You can always target those previous reaction highs. I'll give you that. So let's just say that's the first target there. I'm going to go a little bit below the actual spike high right there because I see multiple candles there. 213, 246, and then 323. Again, if we get some upside momentum and things really look constructive, I'll consider adding additional targets. But right now, I think 323. If you got that and it came quick, that'd be 80%. Either, again, trail up stops, tighten up stops if you want to hold out for those additional targets, or just book profits and then recycle back in if you get a pullback to support and the sector still looks good. ZVO, there's a little minor downtrend line there. It's been building like a lot of these, positive divergence on the indicators. So if it can pop the minor downtrend line, next resistance would be the secondary or the primary uptrend downtrend line. 168, and this would be my current final target, 210. Again, this one's not broken out, and it's not really doing anything right now, but if it gets to 210 from where we're at, that's about an 85% gain. ZME, this was another one I highlighted, and we're almost done with the list here. Highlighted back here, and you can see what happens. Sometimes these things just explode because of the high short interest, and they're left for dead. Here's a great example, one that came down, ran at and tested that $1 level, came close. Let's see, the low was $1.06. It had a nice downtrend line, but you had to be in it in advance because it broke out, and unless you wanted to chase a gap of, let me try to get on that candle, close enough. Unless you wanted to chase a gap of 500 and almost 600% there, because it was peaked out that day at a 665% gain on the day. And you can see where it went to, right into this big old gap back here, right about in the middle of that gap. And that was it. They faded most of the gain, but the breakout's still intact. If you look at it, it looks crazy, but there's a big breakout, initial leg up. And right here came down, put in a higher low, and it's starting to move higher. So, and I'm watching the sector. That's why I cover all of these stocks. I want to see broad-based participation. And again, I've gone through, there's a lot more in the sector. I'm just showing you my favorites. LAIX, positive divergence, not one of my favorites here, but there's a nice downtrend line in which to trigger a long entry. It's below $1, it's 55 cents, so that's penny stock. And another thing is this is going to have a higher risk than some of the higher priced ones. 84 cents, 107, and 141. And then the last one, REDU, Rise Education Cayman Limited. You've got pretty big divergences that have been building. You have a little minor downtrend line there, and then a secondary trend line. Each one, if and when taken out, should be bullish. And this one I would target up there about 187. It's a pretty aggressive target, but that's the nature of these beats. Look, see that broke out here, and then it didn't take off right away. Had a little bit of price resistance right here. You can see that once it took that level out, this thing spiked right up to that level there. 122% in a single day. Now, was it just random coincidence that it stopped right there? No, not at all. That's what I'm talking about. This technical analysis, it's the bomb. It really is. I mean, look at that right there. See the top of that, the top of the gap? That was the highest point of the day on that big gap down. That's where traders sold. So, again, if you do OCO orders and you're in something like this and you were waiting for that breakout, you can even have orders automatically when you're not in front of your computer trigger. It's called a buy stop. You don't own a position, you put a buy stop at, let's say, whatever that number is there, 85 cents, 80 cents. It would enter you into the stock. And then you would have your sell limit, let's say always, the gap was, let's say, I'll tell you exactly. The high on that candle was 184. The stock hit a high that day of 186, but I would have had a sell limit a little bit below the 184 level because sometimes if everyone's seeing that, obviously a lot of traders saw it, some will start stepping in early. So I'm not going to try to squeeze out an extra 3 cents, on 100 and something percent move. So that's where a logical, especially if you're not in front of the computer, again, those OC orders, one cancels the other. You have a stop down below where you're willing to stop out if wrong, and sell limit order. And that is about it. If I see any others that stand out, I'll let you know. I've gone through quite a few in the sector, but not all of them. There's a lot out there. And again, the sector, it's just the education and training services sector, and it loads all the components of that sector on my charting platform. It's not just Chinese stocks. Again, most of those are, but not all of them. And so in some cases, it might be the baby got thrown out with the bathwater, where a lot of better companies, maybe even U.S.-based companies, got dragged down with the selling. And like anything else, it either works out or doesn't. So if they don't pan out, these divergences never don't pan out for moves, and we don't break out, then we'll just move on and go on to the next one. And this has been Randy Finney with the Right Side of the Chart. Have a great day.